Well, I am thrilled to be here with Amy Cappellazzo, who has just been introduced, which means that I don't have to do it, which means that we can jump right in. As a matter of brief housekeeping, when we're talking about the art market, generally speaking, we're talking about the 20th and 21st century artworks as opposed to much older pieces, so unless we specify otherwise. And so, Amy, it has been a weird month or two in the art market. We saw the major May auctions in New York maybe stumble, maybe take a nosedive. I don't know how you want to diagnose it. We're about to head into Art Basel, which is the biggest fair of the year. What is going on with the art market?
Well, I would categorize the May auctions as maybe patchy is a good word. Really, so there were some perfectly celebratory moments of things selling very well and the market coalescing and agreeing on an object and its greatness and the ultimate price. And then there were places where things that felt stable 6 months ago, a year ago, maybe softened and fell out a bit. I would say that happened mostly in areas where the where the auction houses over-expected bidding and over-expected the price, or in places where the markets were much more speculative for younger, more emerging contemporary artists.
So what does that mean for someone who is thinking about investing in art on the secondary level, thinking about it at a very, very high end, 2 million up? How should people understand what the state of the market is presently?
Well, honestly, you know, there's a lot of cash sitting on the sidelines, as with the larger market, and there is, any kind of softening or dip really becomes an opportunity. So I do think there were some opportunities to be had if you could move quickly, if you knew how and where to look, if you were, prepared to be active on a moment's notice where things were going a lot less than people had expected.
Well, let's focus on that for a second. Where were the opportunities? Were they in specific categories, specific artists, specific periods? What is the market overlooking right now?
Well, I would say that in general, the market has been very focused on a masterpiece category. And I think masterpieces are still masterpieces, and they are, the premier icons of what people want. And those that have the cash still have the cash to buy them at nearly any price. Because the masterpiece is still a seller's market, not a buyer's market. So the seller has control of naming the price. In the more emerging categories, so sort of go from the very high to the very entry level emerging, that's been a highly speculative market. And the truth about the primary market or the newly secondary market of young artists who are still in the making in their reputations, art historically, et cetera, that was really patchy. So, yesterday's news of this one's going to be the next hot star and then seeing it crater was happening here and there for some of the emerging artists. In the middle, there's moments where you can get some beat up blue chip where things just feel off market, not as hot as we thought. We saw that a little bit with de Kooning. We saw it a little bit with Krasner. We saw it a bit with, even markets that had been white hot, like the Hockney market. We saw a little bit of softening there and there were some opportunities. So I would say focusing on that middle level, and in the art market, that's from say 2 to 10 or 2.
Right.
There were some real opportunities.
It's funny because one of the main things that I keep hearing at least, is that art is too expensive. That there has been a built-up valuation of prices because people are buying with the expectation that they'll be able to sell for even more.
And for a long time, that's been the truth. So.
Are we seeing that subside a little bit?
Yeah, I mean, the place where that is the most acutely felt is really on the more speculative end of the marketplace. If you buy a $2 million Liechtenstein or a $6 million de Kooning, or, the chances are there's some volatility, like with any asset, but it's not magnificent. It's more about, is it a slow time in that market or a robust time in that market, et cetera. But the sort of testing ground for those artists and their marketplaces, those are well-worn grooves of deeply trafficked markets. Like they've been trading for a long time. There's volume and traction of trading at all times.
So in a sense, you're saying that if you kind of stick with the blue chip, you're not going to find too many surprises, and even if it's...
Well, what you want is a good 10%, what you want is probably a good 10 to 20% opportunity on an asset that pretty much holds its value. You actually don't want a 70% off sale because maybe it will never return to its previous levels.
That's, I think, quite valuable.
Right.
So, obviously, you are dealing with some of the world's richest people who...
Or those that spend the most on art.
Well,
maybe they're not the richest.
One assumes that the two go hand in hand, given that if you're liquid enough to spend $10 million on a painting, you've hopefully got an extra $10 million to spare. What are your clients saying? Are your clients in a spending mood? Are they in a selling mood? What's the attitude of people?
I would say most of my clients are more judicious about wanting to be in a buying mood, but being careful and thoughtful about what the right price is and what to get. So if 3 or 4 things were on their wish list and the market just has gotten away from them, or it's felt too hardy and robust to compete, they now are looking closely and saying, okay, which, of our 4 or 5 on the wish list, which one should we narrow in on now, because it might be our chance.
Is that different from years past?
I mean, you're always looking for the right piece in the wrong hands or the right moment to buy something that's a little off radar. So I would say that's generally the trend. There's just going to be more potential for that opportunity now.
Interesting. And in terms of geography, you have clients all over the world. Are certain areas more ascendant than others right now?
Well, from my own life experience of having lived through, the early, like 2008, 2009 marketplaces, there's always someone who has money, and there's always someone who wants something, and the question is what's the clear price, right? So there's plenty of Americans still very active in collecting, very thoughtful, very much focusing on what a good acquisition can be in a time when the market feels a little bit down. I would say Asia is very, very active, and that's certainly been my firm's experience since the beginning of the year. I would say Europe is a bit quieter, but maybe just a bit more steady and not necessarily reaching at the highest levels.
So, I mean, I think for people in this room, people who are watching, thinking about maybe either staying on the sidelines or entering into the market, how would you advise people actually begin to approach what people are offering right now? Particularly as Basel.
Yeah, I mean, I think first of all, everything's just a bit slower, so you can ask a lot more questions now, which is really great, because sometimes Basel, the art fair can feel very fast and furious, and there's crowds everywhere, and if you're looking at something really good, you feel like there's someone right behind you ready to buy it if you're not. So I think it's a time where you can slow it down a little and ask a lot more questions. Like, where does this particular example rank within the artist's oeuvre? Like, what can you show me comparables? Can you show me comparables art historically, and then comparables that have traded recently, so I might get a sense of value. I think it's a good time to be able to ask and do just a little bit more due diligence rather than use the pressure of the common pool of others who want it as your form of due diligence that it's a legitimate thing.
Well, and of course, well, maybe not of course, but when that pressure dissipates a little bit, you're going to see, or historically we have seen, a variety of artists' markets really disintegrate. Do you foresee that happening when that, let's call it hype, is depressurized?
I mean, I often, first of all, I want to preface this by saying I love young artists, and I have, I visit a lot of artist studios and follow very young artists, both from, out of personal passion and for my own collecting a bit. But I always tell young artists, look, go slowly. Like, you could be a one-hit wonder, as they'd say in the music business, real fast. So take it slow, focus on the work, make sure the work is great. Don't put anything out there you wouldn't be proud of 10 years from now. Just really take it slow. I think there's been such hype and expectation around the primary market that that's arguably the most dangerous and speculative market to be playing in. So that's the one to really watch. And when those artists who can't survive the glare fall out of favor, it's usually permanent. So
right.
You just don't really want to burn out at 30 or 32. It'd be a lot nicer to make it further, right?
Words to live by.
Yes, exactly.
For all of us.
Right. So I do think that's important. But some artists just don't survive the glare, and there's only a handful of artists in a decade that are ever memorable for that time that they came of age.
It's interesting that you say this, because we are in a moment where it feels to me certainly that there are more art fairs dealing with primary market works than ever before. How do you reconcile those two things?
Well, someone smart one time made a comparison to sort of animals during like long winters, and they say everyone has to go deeper in the forest to be fed. So that means dealers need more and more inventory, and the greatest place to get it is in places where it's plentiful and available, even if you don't know if it's nutritious food yet. You sort of go for it and see if it'll work out. Supply side constraints on the more classical side of the market have been tough for dealers.
Right. That's interesting because that is exactly what I wanted to transition to, which is this sense that there might be a constrained supply of this kind of more blue chip material that you're talking about people investing in. It seems like estates are not necessarily coming onto the market quite as much. Is that wrong?
Yeah, no, I mean, I think estates, you're dealing with for the last 20 years, the market has been fed by estates that contain impressionist and modern works of art, works from the late 19th century and earlier part of the 20th century. And that the age of the person who was collecting that is now, 90s plus sort of thing. And you're getting the second generation of contemporary buyers. So meaning they started collecting seriously in the 60s, let's say 50s or 60s. Now you're in the second generation of that where their estates are coming due. And we have, we see lots of things happening, like a little bit more clever tax planning, ways of understanding that this is actually a significant part of their net worth versus what it was, say, 20 years ago, or maybe it wasn't quite at the level it is today. So there's been much more sophisticated tax planning. There's always various trusts that can hold art for indefinite periods of time.
And so all of that is basically holding back the supply that we would...
Holding back supply. There's also... I think an increased interest in collecting, so even the next generation might want a little bit of their parents' art, whereas before there was a sense that that was their parents' stuff and they would go get their own stuff. But now when the stuff's really good, you just want it. I think also you see the competition very fierce between the auction houses, and that leaves dealers sometimes a little bit less in play for competing for big estates, simply because it's become a very capital-intensive commitment.
And so are all of these factors making these kind of blue chip contemporary modern works more expensive, or is it actually because there isn't enough coming onto the market, does that sort of suppress demand because not enough people can want it and get excited about it?
Well, there is enough volume to, I mean, it's not like there's, I always say the monster stops wanting, if you stop, like the monster stops wanting what it can't be fed, it'll find something else to eat. So markets that are down to a trickle, like there's so little inventory available by those artists, people just stop wanting it and go on to something else when something's too scarce. But, estates in general, like of high quality material, things that have been locked in collections for 30 years, this is all very, very desirable. So the competition of the trade to get access to it, to sell it, and of course make commissions, et cetera, is heightened, which in some way heightens the overall desire for it.
So we're getting short on time. I think what a lot of people might want to know is, what do you see within the art market currently as a growth area? Is there something that, if we're looking at this from a sort of value investing standpoint, what do you see with real potential? Is it, whether it's an artist or it's a period or medium?
I would say, we've lived in a very American moment for a long time. Now we're going to see like certain parts of the world that didn't get as much attention for their art historical masters. For example, we had a big, revolution of Japanese works that were made in the 50s with Shiraga, Motonaga, et cetera. You're going to see some of that. You're going to see artists who are overlooked, women, artists of color still play a role, though the pendulum will swing back a bit, and you'll start to see the tried and true members of the art historical canon come back, who've been a little bit less hot because women and artists of color have gotten a lot of light. There'll be a little bit more sharing of the pie in that group a bit. But that will come back a bit more, I think, across geographies, across underrepresented populations, and then even the old guard coming back in and looking like a good opportunity.
That's interesting. And do you see the same drivers, as in Americans really kind of dominating the market, with Europe and Asia sort of splitting the rest?
America and Asia will drive the market, and Europe will be a little part of that. But I see Europe as a little bit quieter for a while.
That's interesting, and I mean, potentially that also could be a buying opportunity for
yes.
for people who are interested in.
Europeans always collect. It's just where and what level. So.
Well, that is the key.
Yeah.
I see from the time clock that we have run out of time already. I could do this for hours. It has been really, really fascinating to hear your insights, and I'm thrilled to have you here.
Thank you. Thank you for having me.
Thank
Pleasure.
you for joining us.
Thank you.
It's not just stars and